Hi guys, welcome back to Elite. Thank you so much for joining us at our virtual event this year. It is our kickoff for our monthly local dish events. This year we are still being super cautious, so we wanted to make sure to make this event virtual, but we are hoping next month we will be in person at our office so we can see everyone. So today I would like to introduce you guys to Radley and Ashley, and they are from PRMI. And today we are talking about credit. I would say credit is one of the most important starts to getting a home loan. It's kind of that gateway to whether you can get a loan or not get a loan, and it's kind of mysterious. It's kind of like the Wizard of Oz, like the guy standing behind the curtain. You just don't know what's going on. You get a score. So we just kind of wanted to break it down. The season's going to be really hot this year again, and we just wanted to make sure people are ready to go, have that credit, pumped up, ready for the season. So first of all, let's just break it down simple. What is credit? Why is it important? And why do we even have it?
Okay. Well, I'd say credit kind of rules the world. It really does. There's a lot of things that, everyone kind of knows, if I have credit, that means I can get a loan, or they think that most of the time they're just tying it to this initial purchase that they're going to make. But I think what a lot of people don't realize is that now employers are pulling credit. You rent a property, you get your utilities turned on. Even if you go buy a cell phone, they want to run your credit. So I say that your credit is what is going to definitely dictate your financial lifestyle, or even your options as to what you want to do. I would hate it to, land the dream job and then all of a sudden you can't because of your credit score. So credit affects literally everything and everybody. So the more you know about
the better.
The better.
So what is used to calculate a credit score?
So the number one thing that's used to calculate a credit score is always going to be your repayment history. How good are you at paying your debts without being more than 30 days late on those debts? So that's your number one thing. The number two thing is that if you have a credit card, then keeping your credit utilization, keeping your available credit to where you're only using less than 10%. That's brand new news actually, because it's always been 30% that you have to keep your credit balances under on your credit cards. Now they've lowered it to 10%.
Wow, is that just new kind of COVID?
It is. Everyone got a little bit nervous with COVID, and the lenders, the banks, everyone is kind of a little bit concerned with how we're going to come out of all of this. So they lowered the credit down to the 10%. So you can still have a good credit score if you're at that 30% or below, but it's not like it used to be just a year ago.
Mm-hmm. Crazy. So we kind of hear the term FICO thrown around, especially when purchasing a house. What is the difference between FICO, credit scores?
So FICO really comes from Fair Isaac Corporation.
Okay.
So Fair Isaac is a mathematician that's also kind of designed this model so that your three repositories, Equifax, Experian, and TransUnion, they hold all this data, but they leave it up to him to review that data quickly and spit out a FICO score. So the FICO score that you hear everyone refer to from a bank or a credit union is always going to be a FICO 4 if you're buying a home, which basically again is so that way it's even across the board. Everybody that's going to buy a home, no matter where you go to buy that home through and finance it through, they're going to be looking at the same type of data. So you should get the same score wherever you go. And
you were saying when you try and finance a car, they're looking at a different version of your score.
Right. It's a FICO 8 model. Okay. So the FICO 8 model is if you apply for a credit card or if you also apply for an auto loan, they're going to use a little bit different model that's a little bit more, say, forgiving too with collection accounts and stuff, whereas on the home side, on the FICO 4, that would not be as forgiving.
Okay. So what is the best place for someone to go look at their credit score?
Yeah, so when somebody asks me, how do I see behind that curtain and see what you're going to see, I say, well, then you need to, I recommend people go to MyFICO. MyFICO.com. you can actually go ahead and look at all three bureaus, but you can also say, I want to see my FICO 4 score. I want to see my FICO 8 score. So you can actually pick which model you want to see, and you can get that data.
So is there an expense to that?
Yes, there is.
Yes.
Yeah. So I believe last I checked, it was about $30 a month for that. So you can subscribe to it, or you can use it the one time. But yeah, because Fair Isaac's going to want his overriding royalty off of that as well.
So that kind of leads to the guru that everyone talks about. I know a lot of us in our office use is Credit Karma. So I was surprised recently helping someone, and their Credit Karma score versus their FICO had a 100-point difference. And they were devastated because they had been, they thought Credit Karma was the Bible, and they had been really, working on it. And so what is going on there? What do you suggest, if someone is seeing a score on Credit Karma?
Sure.
Is that like the real score, or maybe not the real score?
Credit Karma to us is similar to Zillow to you guys.
That's right.
So the accuracy is not there, and I'll let you go into the reasons and the details, but I'll work with clients that will tell me, so I know my Credit Karma score is this, and then I'll run their FICO, and so they get a little bit upset because typically Credit Karma will show this, and then their FICO is here, but I compare it very much to the Zillow, and that's how I explain it to them, because they'll say they're going to list their house, and Zillow says it's this, and I'm like, oh, well, get with your agent, and then they'll explain you what the fair market value really is, but I'll let you explain kind of the factual parts.
So I do tell clients that that it really is a good tool. I actually myself have had Credit Karma for quite a few years because one, it'll tell you if somebody pulls your credit, so it's nice to be able to do that. But it's also nice to at least look at the two credit bureaus, which are Equifax and TransUnion, and where you can kind of see what data that those two people are reporting about you. So it's free to do all that. But the problem is that the model that they're actually running that data through is called a VantageScore 3.0. And there's a big difference between the VantageScore 3.0 and a FICO 4 that Fair Isaac uses. And so again, some of the differences is that if you had a collection account that you paid off 2 months ago, the Credit Karma score that you see through the Vantage 3.0 is going to give you a much higher score because you paid off a collection. FICO still says, hey, you still messed up and you still paid it, but we're not going to let you off the hook that easy. We're still going to count that against you, and then we're going to wait till it ages. So after 2 years, we're not going to hurt you as bad for that.
Okay.
So that's one of the biggest differences. How they score credit utilization is a little bit different too. But yeah, I mean, I feel happy if all of a sudden somebody says, hey, my Credit Karma score was only 10 points off. I'm like, that's pretty good.
Right.
Yeah.
So that's kind of the reason why you have two different
I think definitely it boils down to it's a free app, and so just to kind of take it with a grain of salt. But just like you, I think it's a great tool to kind of help see where you're at and improving. So what have you seen kind of post holidays, kind of credit issues?
So we've run into borrowers, over the Christmas time, utilizing their credit cards for purchases, for the Christmas gifts, and so we see their credit card balances increase. Before Christmas, their credit scores, were maybe a little bit higher, and now that their credit card balances have increased or maybe even maxed out, we're seeing their credit scores drop due to that because of the that 10% balance utilization.
And I think a lot of times we see it also with clients. They'll get pre-approved, they'll get that loan going, and they think that they're golden. And I think a lot of people don't remember or forget that right before closing, there is a last minute check. Like, we got to make sure everything. And so I know a lot of people will kind of get caught up in that, oh no, scramble, I went and bought furniture, or went and did stuff. So we just always caution, like, you get that pre-approval, you put everything away, Don't touch anything. Don't use your credit cards. Don't buy a boat. Any of that sort of stuff.
That's correct.
Yeah. So 2 scenarios. We'll start with the first. Someone wanting to purchase a house with no credit. What do you recommend to help them get to that credit ready score to buy a house?
So I tell people the quickest way that you can get your credit score if you have no credit whatsoever is actually it is a credit card. So not only just a credit card, but we always tell people to get a major credit card. So a Visa, a MasterCard, Discover, American Express, and even if it is a secured credit card. A lot of people don't realize you can get just the same amount of points off of those as well. But I always tell a major credit card, and then you're kind of put under a microscope for 6 months. So if you use it to buy a tank of gas and you make your payment on it like you're supposed to, after 6 full months of you doing that, you will see your credit scores propel. I mean, that is honestly the quickest way. We have a lot of people that will go get a car loan or just borrow against their car, and that installment loan doesn't work the same way, and you don't get the same amount of points. And so people sometimes get discouraged when they chose that type of method versus just getting the credit card.
Okay. So second scenario, bad credit. What is your, I know there's no quick fixes, but in your professional opinion, the quickest way to kind of pump some life and energy into that credit score?
So we have a system that we utilize that we can kind of compare where our client's credit score is currently and where we need it to be. And so the system will specify exactly what they need to do in order to get them to their target score. Whether it be paid on debt or just continue to pay, on time or whatever the scenario is. But we will, take that time to go through that with them. It's a fantastic system, something I've not seen before.
Very accurate?
It is, and actually not only is it accurate, but it'll say if the client will spend $2,800 and disperse it between these accounts, it's an 84 or an 88% likely to get these scores. So it's not 100%, but it is really, really close. And it sometimes still kind of surprises people where the thing they have to pay down is their student loan, and they don't realize it's because when they borrowed $10,000 and they haven't made payments on it, it's $11,000 it's owed. They didn't realize that that's hurting their credit. So maybe that $1,200 has to be paid to get that student loan back down to get them those extra 10 or 15 points.
Okay, nice. So we hear stuff, and I don't know if you guys utilize it, but there are some legal services, some lawyers. Do you guys still take advantage of those kind of services where kind of you bring them on to help clean out some bad debt?
Yeah, that's true. We've used and we've worked with My Credit Guy. We've also used Credit Law Center out of Lee Summit, Missouri. Both of those have been great companies to work with, looking at the stuff and kind of seeing what they can help. Sometimes it's, they help with a pay for deletion, which is nice because sometimes the customer doesn't know how to do that themselves. So they'll help them pay an item off and get it deleted from their credit report and stuff. So
because there's a difference from just paying it and it not being taken off.
Yeah, that's definitely, when you're getting ready to do that, you really want a professional to help you because the outcome is day and night difference. Okay,
and then you guys have all those resources to kind of help people out. So we were talking, we have some renters that are looking to buy a house, and they did get, we were asked to do like a rental verification to help them in those final stages of purchasing a home. So is that for their credit score, or why is the loan requiring a rent verification?
So the rent verification is being asked for because maybe somebody has really marginal credit and they just don't quite fit the mold that the bank's looking for. So there are sometimes some exceptions that can be made, and it's not really to help credit, but it's to help strengthen the borrower because maybe they don't have enough credit or what they have is just so minimal that if we can verify that somebody's paid 12 months of rent payment on time, then we feel like they're probably going to pay for the roof over their head when they buy a house too. So there's a lot of weight given to how well somebody pays their credit or pays their rent.
Sounds good. So paying down that credit card balance, I know that can help. What about people who've kind of struggled during COVID and, you know, missed some payments? Is there any quick fix, or is that just a time game?
I think that is just a time. I have an example. So
Okay.
my credit guy that Chris Fisher that Radley was talking about, I was watching a little clip from him yesterday on Facebook, and he is working with one of his clients, and he ran a credit report. And his client had a 760. And he ran it again in 37 days, and that member had one late pay on his credit card, and it took him from a 760 to a 637.
Wow.
For just one late pay.
1 30-day late.
Yes, 1 30-day late. So it's just a matter of time to get that built back up. And that's just, it. I don't know, it's mind-boggling.
Yeah.
It has stuck with me.
So that's something that you just have to give
Yes.
your credit to.
There's sometimes there are some times where I've worked with somebody, and like that example where, again, not very often, but it's worth a shot, is sometimes you can call that creditor and tell them, hey, you know what, I messed up, or hey, I wasn't, but I made it right, I paid it. I've been with you guys for 3 or 4 years. Is there any way at all that you guys can help me remove that late payment? You know, and I have seen it where somebody has said, yes, we'll make an exception and we'll remove it. But it's always worth a shot, because it's a lot of points that you're going to lose.
That's huge.
So how about closing accounts? Do you recommend, you know, if you've paid something off, do you recommend, you know, closing it, leaving it open? Do you see it affect the score one way or another?
Yes, I always tell people to leave the accounts open. Unfortunately, installment loans, you can't leave those like a car loan. Once you pay that last dollar, they're going to close that automatically. And unfortunately, when you pay off a mortgage or you pay off a car, it does lower your credit scores. And so it's just the way it works. But with credit cards, I tell people to go ahead, and if you pay it off, don't close it, because a big part of the model too is how long you've carried credit for. So if you've got, you know, an old buckle credit card from when you were in college, I say save that thing. Don't probably use it because the interest rate's not great on it, but just don't close it, because that's giving you credit for it being 15, 20 years old.
And do those ever close on their own for like non-activity? See, that's another thing.
Some places will give you a warning, you know, to, hey, use it or lose it, and it is a good thing to use it. But you know, as you gain more and more credit depth, and you've had more and more accounts, so if you carry 2 or 3 credit cards, you know, you may not care as much, you know, once you've established credit like that. But I do tell people, yeah, try to go make a quick purchase with that card. If you pay it off, you're not going to incur any interest. Just go pay it off.
Sounds good. Well, any other tips or tricks you guys recommend, or, you know, cautions?
You know, the mortgage forbearances, that was a big deal last year, and it's still something we're still seeing, is that a lot of people took advantage of the mortgage forbearances to be able to not make their house payments. But what they're having and what they're realizing, and all of the guidelines have rolled out to say that if you want to buy another house, you're going to have to get caught back up, and not only be caught back up, but you also have to make 3 monthly payments on time to show now that you're stable. So somebody that's maybe just currently in a mortgage forbearance, you wouldn't have the option to sell that house now and buy another house, and you didn't realize it because you didn't realize that there was those strings attached. The other part of that is that your taxes and insurance are still due. It's just the principal and interest portion of your payment that was actually in the forbearance. So
Yeah, and I think a lot of our clients and friends that we talk to, they didn't realize that they'll give you 3 months, but then at the end of that, you have to come up with that, you know, whole lump sum. So we did encourage people, if you can make the payment by any means, make sure to do it, because it's not as sweet of a deal as, you know, I think some people thought it was going to be.
yeah, some of these, they're actually taking that balance, because the clients are saying, hey, I can't get that cut up. There's nothing I can do. So they're taking that debt and they're restructuring it and putting it back onto the loan. And we saw a lot of that in 08 and 09. The problem is that just sits there, and then the day that somebody goes to sell, they forget about that. And then that's when all of a sudden you realize you have to make a lot more off your house, because you've got now 2 mortgages that are really got to be paid off. So.
Yeah. Okay. Well, we saw a crazy housing market here in Reno County, and I think all across the U.S. I read a stat yesterday that in November, which was kind of the last month that was recorded and buttoned up, housing prices were 9% over the year before, and that was the highest jump in 6 years. So we call it a seller's market. I think what we're encouraging our clients to do is you've got to get all this stuff buttoned up before you go looking at houses, because you have to have all of that taken care of, because houses are moving way too fast, and we see people's hearts get broken because they think you look at the house and then you take care of the the lending side of it, but it's got to be the other way around.
Right.
Yeah.
Absolutely. There's quite a bit to still, borrowing money for a house. So it's way better to go through all of those hoops, provide all the documentation, get it reviewed. And then when you get that pre-approval letter, that's what's also nice. A pre-approval letter is better than a pre-qualification
Yes.
letter. So something where none of those documents have been reviewed in that competitive market, it's going to set your offer apart from others for sure.
Definitely. And I know the nice thing and what we really appreciate about you guys in PRMI is it's not like shut the door. You work with people, and it can be a 3-month, 6-month, even a year journey, but just to have that, because I know some of our clients, they'll just get frustrated because they'll go to a bank or somewhere that no, we can't
Right.
help you, but we appreciate you guys. It's like, well, we can't help you right now,
Yeah.
but do these couple of things to improve the situation. So thank you guys for joining us for this event. I know we're really looking forward to another crazy busy housing market this year. I don't even know how wild it's gonna get. There was this little sweet spot of between $100,000 and $150,000 houses that were going $10,000 to $12,000 over asking, multiple offers, which just kind of like, as realtors, we've never seen that.
Crazy.
So it has been crazy. Next month, last Wednesday of the month, we are doing a free money to buy a house class. We have got Interfaith Housing, who have an amazing saving program to help you with your down payment. And then we will have Sked here, who they help with doing winterization and helping getting your house fixed up to sell. And then also we will have a gentleman with the city. There are some great down payment programs that the city offers in certain areas. So lots of ways that you can kind of layer some money to buy that house. So thanks for joining us, guys, and thank you for coming out.
Yeah, thank you for having us.
Yeah, no problem. Any information is much needed and awesome. So thanks, guys.
Thank you.